Oh, okay, Alexander. I didn't uh, got your the doubts that you have sent to that person. So it will take some time to get it delivered to me. So meanwhile it get delivered to me. Do you have any other doubt you want to ask? Anything? Any other thing?
Uh, yes, sir. Can you explain manager's commission one more time?
Manager's commission.
Yes.
Uh, just a minute. Alexander, could you please share those doubts again to that person to whom you have already shared?
Okay, sir.
Okay,
Okay.
because Nishkosh is asking to forward those doubts again.
Okay, sir.
I have received few screenshot. These are from a rectification of error, right? Alexander, am I audible to you?
Yes, sir. Not. I have doubt in another question actually. I'm resending it right now.
Okay, okay, right. Okay, so right now you're asking about the manager's commission. All right, so just all right. So manager's commission. Yes, Alexander. So manager commission is something which is generally paid to the managers of a business uh, in addition to the salary. And such commission is generally given by the business to motivate the managers. And usually manager commission is calculated at the end of the year. So mostly it is treated as an outstanding expense for the business. So it is a kind of liability. Manager's commission is always considered as a liability. So it will be shown under the liability side of the balance sheet. And it is to be given from the uh, whatever the net profit that company generates. So let me briefly tell you. Firstly, manager commission uh, is an amount which is paid by business, paid by a business to their managers in order to encourage or motivate them. Secondly, it is given out of the whatever the profit that business generate. So it is a proportion of the net profit generally. Net profit general. So if it is due, it will be considered as an outstanding. If manager's commission is due, then it will be treated as outstanding manager's commission, and that is a liability for the business. Outstanding commission is a liability for the business. Okay, and once it is paid, if it is not outstanding, if it belongs to the current year only, so it is generally shown under the profit and loss account. Profit and loss account, and on which side it will be shown on the debit side of the profit and loss account. Since it is obviously it is an expense for the business, if it relates to the current year, if it relate to the current year period, then it will be considered as the expense, and therefore it will be recorded on the debit side. Now this is what manager commission is actually. But if you are asking about the treatment of the manager commission, then this is how we treat manager commission. Treatment, how do we treat it? Accounting treatment will be, as I told you, this will be reflected in the profit and loss account. So it will be manager commission is transferred to the profit and loss account. So the general entry for this will be profit and loss account get debited. Profit and loss account will be debited to manager's commission account. Manager's commission account. Let's say if we are paying a commission of 5,000, then this will be reflected like this. But generally, manager commission is given in the question in terms of percentage. So it is generally given in the question like this, that manager commission is to be paid. Manager's commission is to be paid at the rate 6% on profit. So what does it mean? It means that first you will calculate the total profit, the net profit, and on that amount you will be calculating the manager commission. So let's suppose, for example, the profit of the entity is 4,50,000. So in order to calculate the manager commission, calculation will be done like this. We will be doing 4,50,000 divided by 106 into 6%. So whatever the value that you will get here, this will be considered as the manager commission. Alexander, is this clear to you?
Yes, sir.
Yeah. So what are you actually asking about the manager commission? You are asking me to explain the theoretical aspect of the manager commission, or you want me to explain the accounting, basically accounting treatment?
No, sir. In school, according to the question, like if the question says manager's commission before profit, then it has a different treatment, and when it says
Hmm.
after, it's another treatment.
Hmm. Correct. So if it is before profit, then how do you treat it?
We don't add the rate to the 100.
Correct.
Yes,
And if it is after profit, then you will add whatever the percentage of commission is to the 100%.
yes.
Yeah.
And
So do I need to explain more about the manager commission?
no, sir, no problem.
Okay. Okay. All
I
right.
I sent the question to
Send me
him.
the
He said
questions,
he has shared it to you.
but I haven't received it yet. Let me check it once more on my
Oh,
WhatsApp. Okay, so I received one question wherein you have been provided with a trial balance. It is written here that from the following trial balance of Messrs. Arjuna and Sons as on 31st March 2018, prepare trading and profit and loss account. Is this the question that you have shared?
yes, sir.
Yeah. So here we have the trial balance given in the question, and we have few adjustment in the question as well. And from this information, we need to prepare the trading account and the profit and loss account.
Yes,
So this seems easy, but where is the problem in this question, Alexander? Do I need to solve the entire question for you?
yes, sir. And the bad debts is where the problem is, because once you add the provision for doubtful debt and whatnot, it will become a minus figure.
Hmm. Just a minute, let me check. Provisions for bad debt is 6,000, okay, and bad debt incurred is 6,000. Into 5% provision for doubtful debt and 2% discount on debtors. Total amount of debtor is also given in the question. Na? So 2,06,000 is the total amount of debtor. On this amount, we will be making a provision of 5% and 2% discount on debtor. Okay. All right, no problem. Let's just make the first of all make a final account. For that, we will have to prepare the profit and loss account and the balance and the trading account and the balance sheet. Okay. So Alexander, could you just prepare a trading account first?
Okay, sir.
Yeah. Okay. So I'm giving you some time. Just prepare the trading account. Let me know the gross profit, then we will move to the profit and loss account.
Excuse me, sir.
Hello, Alexander.
Ye- yes, sir.
Yes.
Uh, what manager's commission we have to add it to net profit?
So what is the amount of net profit you are getting?
4,32,000.
4,32,000. This is the after reducing the manager commission, na?
No, this is before that.
Before that, na? Okay,
Yes.
provide manager commission at 10% on net profit. Okay, after charging such commission. So now, whatever the profit that you are getting, you will have to divide it by 110% and then multiply it by 10% so as to calculate the manager commission.
Okay. And after that, what should I do with that figure?
Okay, could you just please repeat once more what is the profit that you are getting
Four
before
lakh
subtracting the manager commission? Sorry,
4,32,000.
4,32,000 is the profit. Okay, so divided by 110, multiplied with 10. And whatever the value that you will get here, you will transfer it to the debit side of the profit and loss account. Is this clear?
Yes, sir. Then, and also it will be as a liability also.
No, no. If manager commission is not paid, then it will be considered as a liability. Since it is being paid, since it is not mentioned in the question that it is due, won't be paid. So we will consider that the this particular obligation will be met out during the current year. Hence, it will not be treated as a liability. If question mentions you that manager commission is going to be due, we are not making payment for the manager commission. In that case, it will be considered as the liability, and hence it will be shown in the balance sheet on the liability side.
Okay. So this number I have to subtract it from net profit.
No, you just write it, and then yeah, after writing it there, then you will calculate the profit.
Okay.
So this question is given by your teacher.
Yes, sir.
Okay. So what is the amount of manager commission you are getting?
Sir, 39,273.
273. Okay, that is right.
Sir, I still didn't quite get it. Are we supposed to subtract it from, are we supposed to, the new net profit will be 3,92,727.
Yes, 3,92,000.
Okay.
You will have to subtract it.
Okay.
Since it is mentioned in the question that commission need to be paid before the net profit. So
Okay.
we will be calculating the net profit after subtracting the manager commission.
Okay. Excuse me, sir.
Yes, Alexander.
The old provision for doubtful debt will be subtracted from debtor.
Just yes, we will be subtracting that, and old one, na?
Yes.
The old one was how much? Provision for doubtful debt was 6,000. Okay, and the value of the debtor. No, see, provision for doubtful debt that is given in the trial balance will be transferred to the profit and loss account only.
Okay.
Okay, and the new provision that we will be making, by that amount we will subtract the debtor, and that amount will also be transferred to the profit and loss account.
Okay.
So just keep this in mind that all the values, all the items that is given in the trial balance is transferred to only one place. Either it will be transferred to the trading account, profit and loss account, or the balance sheet, but any additional entry, any adjustment entry will be transferred at two places. So provision for doubtful debt that is given in the trial balance, it will be reflected in the profit and loss account only, but provision in the additional information will be reflected in the balance sheet as well as in the profit and loss account.
Okay. But sir, that old provision for doubtful debt will be subtracted from bad debts, right?
No, no, no.
But sir, in school we do it like that.
Why you will be subtracting it from the bad debt?
I don't know, sir.
See, for just first of all, record it in the profit and loss account. You recorded the provision for doubtful debt in the profit and loss account?
Uh, Sir, I subtracted it from the bad debt.
Firstly, we will record the provision for doubtful debt here. Provision for doubtful debt 6,000. Okay. Then what is the value of the what is the total value of the debtor?
So
Tell me.
2,06,000.
That's 6,000. Okay. From this 2,06,000, we need to make a firstly we will have to subtract the amount of bad debt. Okay, and the value of bad debt is 6,000. So now this 6,000 will be reflected in the profit and loss account. So bad debt 6,000, and then we will make a new provision for bad debt at the rate. What is the value of what is the percentage of provision that we need to make? 5%. Okay, so 5% on the remaining amount. All right, so on 2 lakh we will make a provision of rupees 10,000. 5% of 2 lakh will be 10,000. No? And here I will be writing 1,90,000. This amount will be transferred to the profit and loss account as well. Provision for bad debt 10,000. Is this clear to you?
Yes, sir.
Yeah, this is how we will be doing it. Yeah. Oh, just a minute. Okay, so we already have a provision for doubtful debt. Now, provision for doubtful debts were 6,000, and bad debt actually incurred is also 6,000. So we are going to subtract it. We will be subtracting it. We will be adding this. So now the total amount of provision that will be reflected in the profit and loss account will be 10,000. This 6,000 and 6,000 will get cancelled. Is this clear to you, Alexander?
Sir, it is really confusing.
Okay, so provision for, we have already made a provision of rupees 6,000, assuming that there will be there is a possibility of bad debt. So this provision is recorded in the profit and loss account on the debit side. Now question is mentioning that there is a bad debt of rupees 6,000 incurred. So what are we going to do? We will be subtracting this amount of bad debt from the provision that we have already made. So when we will subtract it, the provision will get 0. And now we have made a new provision this year, new provision for bad debt in this year. We made it at the rate of 5%, that is 10,000. Okay, so the final value that will be reflected in the profit and loss account will be 10,000. Is this clear now?
Okay, sir.
So do you have doubt? You want to ask anything?
Um,
Anything that you or did not understood?
Sir, in the school, it is like we add the new bad debt, like there's already bad debt in the question, and then you add the new bad debt, and then you minus the old provision for doubtful debt, and then you add the new provision for doubtful debt.
That is what we are doing now. This is the provision for doubtful debt from the trial balance, right? And
Yes.
out of this value, we are subtracting the bad debt actually incurred. And then again, we made a new provision for bad debt for rupees 10,000. So we are adding this. So in simple, you can say that we are adding this value. we are subtracting this value and we are again adding the new provision. So this 6,000 and 6,000 get cancelled, only 10,000 will be remaining, and that is what it will get reflected in the profit and loss account.
Sir, I think it would be better if you could work out the whole question for me.
Okay, but it will take a lot of time. Okay, no problem.
Yes.
So that is why I've asked you to send me your doubt so that I can accordingly solve the questions so that it don't take a lot of time while we take the session.
Yes, sir. I had sent it, but to the wrong person.
Okay. All right. So first thing, let's get to the trial balance. And in the trial balance, the first item is cash in hand. So cash in hand is 15,000. We are going to the balance sheet. Cash in hand, 15,000. Do we have any adjustment entry regarding cash in the question?
No, sir.
No. Okay, then we have debtors and creditors. So debtor is 2,06,000. Debtors 2,06,000. Since there are adjustment, so we are not writing it here. We are writing it within the column. Then we have creditors of 1,89,000, and I don't think there are adjustment entry for creditors as well. So we can write down the entire value in the final column of the creditors, 1,89,000. Then drawings and capital. So capital is how much? Uh, Drawing is 1,80,000 and capital is 8 lakh. So capital, then drawings 1,80,000. And we will add net profit in it. Next item. Then we have purchase and sales. Purchases are 8,26,000. By sales. Sales is 15,50,000. Then I don't think there are any adjustment entry for the purchase and sales. Okay. Then we have the opening stock of 4,20,000. So to opening stock, 4,20,000. After that, we have return outward. That means it is a sales return. Return outward is a purchase return. So to purchase return. Purchase return is 10,000. Then we have carriage inwards. Carriage inwards 6,000 to carriage inwards. Wages, there are wages we have the outstanding wages of rupees 24,000 as well. So wages is 40,000. So wages 40,000 plus outstanding wages. Outstanding wages are 24,000 as well. So 24,000. So total will be 64,000. And we will record the wages in the balance sheet as well. So outstanding wages. Outstanding wages is 24,000. Moving on to next item. We have power. Power is 60,000. There are no adjustment for power. So 60,000 for power, and power is obviously a manufacturing a direct expense. So 2 power 60,000. Then we have machinery of rupees 5 lakh. Machine. After that we have furnitures. Furniture 1,40,000. Then rent 2,20,000. So rent 2,20,000. Then we have salary of 1,50,000. Salary 1,50,000. After that we have insurance of 30,000. Then bed debt 6,000, and there are provision about the bed debts. Okay, so bed debt is also given in the question now. All right.
Yes, sir.
I was not sure about this. Bed debt. Bed debts. Bed debt 6,000. We are not writing it in the final column. We are writing it within the column because there are adjustment about the bed debt. So we will deal with the adjustment later. Moving on to next item, we have bank loan. Bank loan 2,50,000. So loan 2,50,000. Then okay, then we have only one item, closing stock in the adjustment 6,40,000. So closing stock 6,40,000, and we will also write it in the trading account by closing stock 6,40,000. All right. So I think we have recorded all the values in the trading account, so we can calculate the gross profit. So gross profit will be Alexander, could you just tally all the items? Is this correct? I
Okay,
have
sir.
recorded all the items. Huh? Sales, closing stock, purchase, opening, purchase, return, carriage inward, wages, power. That is it, na?
Yes, sir.
Yeah. So just tell me the gross profit that you already calculated.
8,18,000, I guess.
8,18,000 you're getting.
Yes.
Just okay. Now this will be transferred to the profit and loss account by gross profit. Okay, just a minute. So this need to be subtracted from the value of the purchases. Huh?
Yes.
So have you subtracted it?
Yes, sir.
Okay. Then we need to deal with the adjustments now. So let's talk about the adjustment. And the adjustment part, we have the closing stock, we already dealt with it. Wages outstanding. So wages outstanding is 24,000. We've also recorded this. Bad debt 6,000. So what are we going to do with the bad debt? We will be subtracting it firstly from the value of the debtors and then from the value of the bad debt 6,000. This is from the adjustment entry. And we are going to subtract it from the debtors as well. Is this clear to you?
Yes, sir.
Now, the next point in the question is provide 5% provision for doubtful debt and 2% discount on debtor. Provision for bad debt that is already given in the question in the trial balance was 6,000. Okay, then we need to make a further provision of 5% after giving a discount of 2%. So the after reducing the value of the debtor, the remaining value of debtor will be 2,06,000 minus 6,000, that will be 2 lakh. On this 2 lakh, we will be first subtracting the amount of discount, that is how much it was. It was 2% on the debtor, right? So that we will subtract 2% from the value of the debtor, that will be 2,000, right? And this is discount need to be recorded in the profit and loss account. So discount, let me write it here too. Discount on debtors, discount to debtors 2,000. Is this clear to you?
Yes, sir.
And now we will make a provision for doubtful debt. after subtract on the remaining value. So provision on the remaining value. Provision for bad debt. What is the remaining value? 1,98,000 will be the remaining value, and from this 1,98,000 we will make a provision for doubtful debt at the rate of 5%. That will be 9,900. Is this clear to you?
Sir, aren't we supposed to make the provision first and then the discount?
For first we will make the provision, then we will give the discount.
Yes,
I don't think we should do that. We will first give a discount, and then we will provide for the provision.
but sir, in school it is different.
So teacher told you to first make a provision and then give a discount.
Yes,
Mm.
no, it's okay, sir. We'll see if the balance sheet tallies, then I will follow this
Okay,
method.
so did the balance sheet actually tallied when your teacher did it?
So this was a revision question. It was a
This
test.
was okay. Let's do
Yeah,
this way only, and then if it does not tally, then we will do it vice versa.
okay.
Okay, so just a minute. We will subtract 9,900 minus 2,000 plus 99, 1,88,100. New provision of 9,900. Is this clear, Alexander? We have subtracted the amount of bad debt from the bad debt that already existed, and provision for bad debt that was already in the trial balance was 6,000. We have added a bad debt of rupees 9,900 more.
Yes, yes, sir.
Okay. All right. Now I think then provide for manager commission at the rate 10%. So now calculate the net profit. Just calculate the net profit, and then we will write down the manager commission. Manager's commission. Eight lakh 18,000 minus 2,20,000 minus 1,50,000 minus 30,000, 15,900, 2,000. 4,100,000. So this is the amount of profit that I am getting. So 3 lakh 60, oh sorry, 36,373. All right, Alexander. So this is the net profit that I'm getting, 363,727. You got the other net profit. You got the different net profit, na?
Yes, sir.
There is a mistake. Let me just calculate. Six, three, two, seven. I don't think it is going to be tallied. Okay, so I think that there is some mistake, Alexander, and I think we should do the other way, the way your teacher did this question. So I think he have first made a discount, made a provision for the doubtful debt, and then gave a discount,
Yes, sir.
right?
Yes.
Okay. So
Sir, that and the bad debts was also different.
bad debt was also different.
Different treatment, yeah.
What was the treatment for the bad debt that he have done?
In school, we add the new bad debts, add the new PDD, and then minus the old PDD from the bad debt, from the existing bad debt.
So this is the existing bad debt, right?
Yes. And
And
then
this is the additional bad debt that we have incurred. Okay, so we will be adding this. Okay, okay,
and
that
then
that is, and then
and then add the new provision for doubtful debt to the bad debt, and then minus the old provision for doubtful debt.
minus the old one.
Yes. These are the only two confusing things for me: the bad debt and provision for doubtful debt.
This should be in fact like this, that this should not be included. Rather we should subtract it from this provision for bad debt. To provision for bad debt 6,000, and then we will subtract a bad debt that is incurred 6,000. This should be done like this. This will be added, this will be added, this will be subtracted, and then new provision will be added again. This is how it will be, how it should be done.
Okay. Then do it that way and see if it's tallying. So,
Let's do this. So when we will make a provision of 5% on 2 lakh, it will be 10,000 on 2,000. 1,88,000 and provision for 10,000 transfer to the profit and loss account. Alexander, what is the value of discount?
30, 3,800 after I subtracted the provision.
30, how it could be 3,800? It is only 2% of the, okay, 2% is no.
Yes.
So 2% of 90,000, it will be 3,800. Alexander, one more correction. Manager commission need to be reflected in the balance sheet as well, because manager, the information about the manager commission is given in the adjustment entry. Na? So all the adjustment entries need to be reflected at two places. Therefore, we have to indicate the manager commission in the balance sheet as well.
Yes, sir. That's what I asked earlier.
Uh, Okay, so these are the value of the asset and liability. All we need to do is now we need to tally this. And okay, let's do it. 3,000 plus 18,620 plus 5 lakhs plus 1,40,000 plus 6,40,000 minus 9,82,000 minus 18,900 24,000 minus 2,50,000 and 362. No, they're arising a difference of 1,70,100. So what is the value of the asset side, total of the asset side, Alexander?
Sir, I didn't calculate it.
Your teacher have done this, no?
No, sir.
Okay. I'm getting 14,81,200. And on the credit side, it seems the value is more than the asset. So 98,000 plus 2,50,000. Yeah, we have both the sides are tallying now. 48,100. See, 9,82,000 plus 1,89,000 plus 24,000 plus 2,50,000 plus 362,000. So sum total of all the credit, the liability is 1 lakh, sorry, 14,81,200. And on the asset side, we have the cash of 15,000 plus debtors 1,86,200 plus 5 lakhs of machinery plus 1,40,000 plus 6 lakhs 40,000. So it is 14,81,200. Alexander?
Yes, sir.
Yeah, so both the sides are telling, since so the answer is correct.
Okay, sir. Sir, can you show me the profit and loss account?
So this is the gross profit that we have calculated from the trading and profit and loss. Then rent, salary, insurance, bad debt. So bad debt that is already given in the question is 6,000. So we have just recorded it here. We haven't done anything with this. But since we have the provision for bad debt already made in the trial balance, so firstly we will record it in the profit and loss account, and then we will also record it in the we will be just okay. So this is the basically this was given in the trial balance now. So this need to be recorded in the profit and loss account only. Then question says that we need to there is a bad debt of rupees 6,000. So this bad debt need to be subtracted from the provision for the bad debt as well as from the value of the debtors. So we have subtracted this from the value of the provision of bad debt as well as from the value of the debtors. And after subtracting it, the remaining value of the debtor will be 2 lakh. And on this 2 lakh, we will be giving a discount of, we will first make a provision for bad debt at the rate of 5%. And on the remaining amount, we will give a discount of 2%. So remaining amount is 1,90,000, on which we have given a discount of 2%. That means 3,800. This discount due to be reflected in the balance sheet in the profit and loss account, and provision for bad debt, new provision for bad debt also be reflected in the profit and loss account. And after writing all these value, then we will calculate manager commission. But in order to calculate manager commission, we will first subtract all these value from this value, and after subtracting whatever the value that you will get on the remaining amount, we will divide it by 110%, then multiply it by 10% so as to calculate the commission, right? And after calculating commission, you will write the value of the commission in the profit and loss account as well as in the balance sheet, because manager commission, the information about manager commission is not given in the trial balance. It was given in the adjustment entries. So it will be recorded at two places, one in the balance sheet and the other in the profit and loss account. After that, after calculating the value of the commission, then you will subtract the amount of commission from this value that you have calculated after subtracting these values from the gross profit, and whatever the remaining amount that you will get, that will be considered as your net profit. And then we have recorded the value of the net profit in the balance sheet, and then delete the balance sheet. Anything that you did not understood and want me to clarify?
Sir, if there is no old provision for doubtful debt and if there is new bad debt, how do we treat it?
If there is no provision, okay, so if there is no provision, then what we will do, we will show this entire amount in the profit and loss account. This amount will be recorded in the profit and loss account, 6,000. Firstly, this will be recorded in the profit and loss account, as well as this amount will be subtracted from the value of the debtor as well. What are we doing now? In this case, in this question, we have the provision. So instead of transferring the value into the profit and loss account, what we have done, we just subtracted this amount from the provision. Since we have already made a provision for the bad debt, so whatever the bad debt that is incurred, we will be subtracting it from the value of the provision that we have already made for it. But if there was no provision, then we will transfer this entire amount to the profit and loss account, because there is nothing to there is no provision from which we can subtract the value of the bad debt.
Okay.
Anything else?
Um, Sir, I have a doubt in another question. Like it's a small one, small question which says prepare a provision for doubtful debt account and the debtors account. Have you seen that?
No, I just received this question only.
Uh, no, yeah, I haven't sent it to you, but have you seen a question like that in this chapter?
I have. I'm not sure, honestly speaking. So I'll have to just send me your question now, so that tell her to transfer. Tell her to forward the question to me.
Sir, if I send it now, will he send it to you?
I think yes. Just try it
Okay.
once. Alexander, have you shared the question?
Yes, sir. Sir, they have seen the message and I don't.
Actually, you are sending to Shriyanshi, na?
No,
Shriyanshi
no,
forwarding to Nishkarsh.
no. I sent it to the Nishkarsh only, I think so. If you want, I can read it out